trading on equity, and for that let me make a table here. You do not do anything, guys. Do not add anything, do not note down anything, all. Guys, most of these terms are used in share market very often. If you see CNBC channel or CNBC Awaz channel, these terms, that is earning per share or ROI or ROC, are used very frequently. Are you all with me?
Yes, sir.
So
Yes.
before we get into trading on equity, you need to understand one more ratio which only ISC students have, that is called earning per share. It is net profit after tax minus dividend to preference shareholders. Means after giving dividend to preference shareholders from net profit, whatever is the profits are there, they all are for equity shareholders. So divide by number of equity shares gives us earning per share, means how much every equity share has earned from the current year's profits. Just try to understand this, guys. What is earning per share? It is net profit earned by the company after paying tax to the government. From that net profit, if dividend is given to preference shareholders, means if there are preference shareholders, obviously you first have to give dividend to them. That is why they are called preference shareholders. After giving dividend to them out of profits, whatever profits are there, they all are for equity shareholders. So that profit divided by number of equity shares gives us how much profit, that is how much earning every equity share has earned, and that is called earning per share. Am I clear or not?
Yes, sir. Yes, sir.
Good. So earning per share, guys, we will use here. Now guys, let me explain you what I have done here. A business or owners of a business require rupees 10 lakhs to start the business. They have two options: to raise funds in form of equity. Equity means owners funds of rupees 6 lakh, and to raise debt of rupees 4 lakhs. Debt means borrowed funds, उधार का पैसा, और ये खुद का पैसा है. The other option is to raise funds in form of equity of rupees 4 lakhs and to raise debt of rupees 6 lakhs. Means in the first option equity is more than debt, in the second option equity is lesser than debt. The debt in the market means the borrowed funds in the market available at an annual interest rate of 12%. Am I clear? मार्केट से अगर आप उधार में पैसा उठाएंगे तो 12% पर एनम के हिसाब से वो अवेलेबल है बैंक्स या फाइनेंशियल इंस्टीट्यूशन से. So here I have written option 1 where equity is 6 lakhs and debt is 4 lakhs. Here I have written option 2 where equity is 4 lakhs, debt is 6 lakhs. In both the options, total capital employed means total long-term funds employed in the business are rupees 10 lakhs. Correct or not? Now, if the business earns return on investment, this is other ratio that you all have. That is called return on investment, that is ROI, or return on capital employed, that is ROCE. If the business earns return at the rate of 16%, then what will happen? If they earn at the rate of 12%, then what will happen? And if it is at the rate of 10%, then what will happen? Under option 1, that we will see here. And the same 3 return rates I have taken for option 2 as well. If you notice, one rate I have taken more than the annual interest rate. The other rate is equal to annual interest. The third one is lesser than annual interest that the business has to pay for borrowed funds. Correct? Return on capital employed is always calculated as operating profit on capital employed. Now in class 11th, guys, you have learnt operating profit in final accounts chapter. Operating profit is profit derived by subtracting all the operating expenses from operating income. Right? It does not include interest on borrowed funds. It does not include tax payable to the government on net profit. So if the return on capital employed is 16%, then 16% of 10 lakhs, that is operating profit, would be 1,60,000. Here it would be 12% of 10 lakhs, that is 1,20,000, and here it would be 1 lakh. Here also the same thing, 1,60,000, because capital employed in both the places, that is here and here, is same. So 120 here and 1 lakh here. Correct or not? I'm asking guys.
Yes, sir.
Now from this net profit, we subtract interest payable. What is the interest rate? Is 12%. Okay guys, so interest is at the rate of 12% per annum. In option 1, amount of debt is 4 lakhs. So 12% of 4 lakhs is 48,000. So here amount of interest is 48, which I will subtract. Here also amount of interest would be 48. Here also it would be 48,000. Correct or not?
Yes, sir.
Right. Now in option 2, the amount of debt is 6 lakhs. So 12% of 6 lakhs is 72,000. So here interest is 72, here it is 72, here it is 72. After subtracting interest, the amount that we get is called earning before tax. In short, EBT. And operating profit is called EBIT, that is earning before interest and tax. So after interest, the amount of profit is called earning before tax. And what is that here? 160 minus 148, that is 1,12,000. Here 120 minus 48, that is 72,000. Here it is 52,000. Here 160 minus 72 is 88,000. Here 120 minus 72 is 48,000, and here it is 28,000. Correct or not? I'm asking, are you understanding this, guys? In India,
Yes, sir. Yes, sir.
in India, income
Yes, sir.
tax on companies is at the rate of 25%. So 25% of 1,12,000, that is 3 and 25 means 28,000. Here 25% is 18,000, and here 25% is 13,000. Here it is 22,000. Here it is 12,000, and here it is 7,000. So now the net profit, that is profit after tax, which is called PAT or net profit, is 1,12,000 minus 28, that is 84,000. 72 minus 18, that is 54,000. 52 minus 30 is 39,000. Here it is 66,000. Here it is 36,000, and here it is 21,000. Correct, guys, or not? I'm asking, have you understood this?
Yes, sir.
Everyone,
Yes, sir.
are you all understanding the calculations? each and every calculation or not?
Yes, sir.
Yes,
Good.
sir.
Good.
Yes, sir.
This equity is in form of equity shares of rupees 10 each. It means here in option 1 the number of shares are 60,000 and here number of shares are 40,000. Correct or not? Because every share is of rupees 10 and here total equity share capital is 6 lakhs. It means number of shares are 6 lakh divided by 10, that is 60,000, and here it is 40,000. We do not have preference share capital here. We have only equity share capital. So now we can calculate EPS, earning per share. How do we calculate that? Profit after tax minus dividend to preference shareholders, and in this example there are no preference shareholders at all. Divide by number of equity shares. Number of equity shares in option 1 are 60,000, here it is 40,000. So 84,000 divided by 60,000, that is 1.4. Means every share has earned profit of rupees 1 and 40 paise. Here 54,000 divided by 60, that is 0.9. Here 39,000 divided by 60, that is 13 by 20. Correct? Yeah, 13 by 20 means 0.67. Here it is 66,000 divided by 40,000. 66,000 divided by 40,000, that is 6.6 and 1/4 of that is 1.5 and 1.5 means 1.65. 36,000 divided by 40,000, that is 9 divided by 10, that is 0.9. And 21,000 divided by 40,000, that is 0.525. Have you understood, guys, the EPS or not? Calculation of EPS?
Yes, sir.
Yes, sir.
Okay. Now,
Yes, sir.
where the EPS is maximum, it is here 1.65. When debt was more than equity in option 2. This is one thing, but this is not the concluding statement, guys. It is not so that debt should always be more than equity. Debt should be more than equity only when return on investment is more than the rate of interest. Then only it is coming maximum. If return on investment and interest rate is same, whether you keep more of debt or more of equity, your EPS will not be different at all. Are you understanding, guys, or not? In both the places, return on investment is 12%, which is equivalent to the rate of interest. And in both the places, EPS is 0.9. It means, guys, if your return on investment is more than the rate of interest, then better is to have more debt than equity. Because at 16%, here when equity is more than debt, the EPS was 1.4, but here it is 1.65. And when return on investment is lesser than the rate of interest, then it's better to have more of equity and less of debt. If you compare this 10% EPS, here it is more, here it is less. And this is what is trading on equity, guys, and that is why it is said that when you earn more return on from your business than the interest that you have to pay on debt, it's better to have more debt than equity. अगर आप अपने बिजनेस में रिटर्न्स उधार में लिए हुए पैसे के इंटरेस्ट से ज़्यादा कमाते हैं तो ज़्यादा उधार का पैसा लो और खुद का कम लगाओ. दैट इज व्हाट इज ट्रेडिंग ऑन इक्विटी. लेकिन अगर आप अपने बिजनेस में रिटर्न्स मार्केट से उठाए हुए पैसे के ब्याज के रेट से कम रेट पे अर्न करते हो, तो फिर बेटर है खुद का पैसा ज़्यादा लगाओ, ब्याज का पैसा कम उठाओ. एम आई क्लियर ऑल?
Yes, sir.
Have you understood
Yes, sir.
all, guys? That is what is trading on equity, guys. Okay, so guys, now look at here, everyone. Keep your pens down and look at here. Here, net profit is much more than the one here. In option 1, net profit is more than under option 2. But EPS is more here than under option 1. Can anyone tell me why it is so? I'm asking guys, the net profit under option 1 is much more at ROI of 16% than that it is in option 2. Yet EPS is more in option 2 than that in option 1. What is the reason you find behind it?
Because they're paying 12% interest.
No, 12%, they both are paying 12%. Here also 12% and here also 12%.
They are different.
Proxy.
Because of option, number of shares are less in option 1.
Very right. Because here number of shares means number of owners are more, among which the profit is to be distributed, and that is why everyone has got lesser share in profits. Here number of owners are lesser, and that is why everyone has got more amount of profits. And that is exactly what is the crux point of trading on equity. When you can earn more in your business than what you have to pay to outsiders as interest, then you should keep as less number of owners as possible. Am I clear? Because if you will have more number of owners, profit will get distributed among all and everyone will get very small share of profits. Got this or not? I hope you all have understood, guys. Yes or no?
Yes, sir.
Good. So conclusion of this, guys, is note down this one, guys. This I have already explained you.